The following is an update and technical analysis on the U.S. equity markets, starting off with the S&P 500 futures, the U.S. Tech 100, the Russell 2000 futures, and then ultimately zooming in on the 60-minute intervals to display some of the reaction that we've had the last 2 days. Well, we had some big headlines rock some of the macroeconomic data today with the resurgence in the prices charged in the services sector, coupled with assertive remarks from Boston's Fed Collins, which led to a strengthening of the dollar, all causing stocks, bonds, Bitcoin, and gold to all decline in unison. Within contrast, crude oil prices surged, defying the prevailing trend, screaming an all-out stagflation scenario. And starting off again with the US 500 futures, where I had mentioned this nice divergent high where we had negative and bearish divergences constructed amongst all three technical momentum indicators. And we had a nice clean rejection right amongst the 45.28 price resistance. Ended up sinking right below its 50-day moving average and closing well down below that key inflection point. And really to the button, right off my 44.45 price support. Long traders, bull traders were bid heavily right off that key inflection point, especially if you're an active and or day trader. Netted you near 0.4% on that move there. Call it as you will, support is support until broken. Where we additionally have the 44.22 price support, the 618 fibs retracement, and then ultimately the primary reactionary uptrend line here off the mid-March reactionary lows here, and that is going to signify the next breakdown and or sell signal here amongst the daily interval, where additional damage could be met if and when we go on to retest that inflection point, which could well result in constructing a dual line of resistance where long traders, bull traders want to defend really this route and transitioning point really at all costs, where you have the 100-day moving average hovering in down below. Well, there's a whole lot of support below, and then a re-challenging of the 50-day moving average that needs to be reclaimed alongside the 786 fibs retracement now that has become resistance. Taking you out to the US Tech 100 futures on the daily interval here. And I've added now a renewed primary downtrend line. New key inflection point here off the ice-colored primary downtrend line, reactionary downtrend line, and I believe this is further validated now, and it looks like we're starting to have a momentum-fueled overshoot back into this minor. I called it a minor primary downtrend line. Wasn't too crazy about it, but again, we bounced right off the button there. Call it off the 415, 281.60 price support there, correlated with the 50-day moving average, especially if you're an active and or day trader. Netted you 0.5% in a single day there, where bull traders and or long traders were pretty successful in that bid. They want to hold this key transitioning point really at all costs to potentially go on to re-challenge this, again, new primary reactionary downtrend line. Short sellers, bear traders would permit a great opportunity risk reward ratio on a prolonged move to the downside to re-challenge this primary reactionary uptrend line here that I've held since the beginning of the year here, and that is a very monumental key inflection point, correlated darn near correlates with the US S&P 500 futures primary uptrend line, and that will be a reckoning moment of truth for all traders if and when we go on to retest that key pivotal inflection point. Whereas we have the stochastics 1033 technical momentum indicator in a bullet bearish crossover starting to wane down, and again I think a snapping of this 15,281 price support correlated with the 50-day moving average ought to do the trick for expelling further damage here in the stochastics 1033, and then ultimately potentially getting you that bearish crossover there in the moving average convergence. And I would only suspect a revisit of the primary uptrend line there if and when that level goes. That's going to be a pretty key level for all tech traders to hone in on and or pay attention and really respect that key inflection point with multiple reactionary highs and lows to strengthen the validation of that price support level. Taking you to the US 2000 Russell futures. And the scenario that I favored is starting to play out here, where we had this reactionary low right amongst this, what I had added the first initial primary uptrend line. And it looks like we successfully were bid up and defended by long traders and bull traders today, right off that key inflection point once again. So again, further validating the strength of this price support level. The scenario that I like to play out here was a potential head and shoulder looking top here. And this is starting to hone in on a potential right shoulder, where we could, again, have a nice big counter trend rally and or squeeze out of shorts there, forming that right shoulder formation. And then ultimately, like I have been hyping and harping about in my previous video, is the 1819 price support level, which is closely correlated with the 236 fibs, and that would be the ultimate neckline. If and when we go on to retest that key inflection point, ultimately that would be the primary uptrend line of the S&P 500 and Nasdaq 100 futures. The neckline is the primary price support level, putting in an additional sell signal if we have a solid daily candle close below that key inflection point, ushering in a wave of selling and stops to go off. Zooming you into the US Tech 100 futures here off the 60-minute interval, and I had favored a breakdown sell signal off this primary uptrend line, minor primary uptrend line, where we had these divergent, nice clean negative and bearish divergence, near-term divergences forming amongst all three technical momentum indicators with very mean jagged divergence. And that was met with a wave of selling, especially since we had cracked that, call it the 15,416 price support there I had mentioned. And again, that was met with a stronger wave of selling if and when that level was taken out. And it was taken out with a ton of stops to go off right after that ISM data release. And then ultimately being bid right off the daily time interval for a steep, small counter trend rally. So again, if we go on to revisit this inflection point, that'll be something to watch for. I've added some new key price support levels here in the 15, call it minor 15,152 price support, 1534, and then ultimately the daily 14,974 price support. Some other key additional levels to watch off of, especially if you're an active and or day trader. These are some key inflection points to play off on for a potential bounce here, if and when we go on to revisit some of these inflection points. And then ultimately, if we have a nice, clean, big counter trend rally, I've always continued to hype and mention this primary concealed reactionary downtrend line here, which would offer the utmost, would provide a great, valuable risk-reward ratio on a short trade setup to the downside. If and when we take out the 15,281 price support correlated with the 50-day moving average, and then ultimately the 15,263 price support there, that's where I believe a stronger wave of selling could occur with a ton of stops to go off, potential margin calls, and then a much larger big wave of selling to a potential of 1534 to a potential revisit of the daily price support level down below. Taking you to the US 2000 futures here off the 60-minute interval, and I had explained how imperative this primary reactionary uptrend line was here off the hourly interval to watch for a breakdown sell signal, hourly candle close breakdown sell signal, and we need a darn near back testing that key inflection point, and offering a great risk reward short trade setup on a move to the downside, and that was good for a 2.8% drop to the downside, just ushering a wave of selling once we broke that key price support level there, where I had additionally mentioned that we had moving average and oscillator divergence, and those negative and bearish divergences certainly played out there, only bringing in a stronger wave of selling. We need a back testing this 19,1250 price support, again, especially if you're an active and or day trader, netted you phenomenal gains just off of a great scalp setup there, down to that move to the 1884 price support there. I've additionally added some key inflection points, additional price support levels to watch here to game in on or actively and day scalp for any day trade setups.